Hey everyone, it's Tom Kratz. I'm right here in the middle of your screen. Can the housing market get any crazier in Ontario? Let's dive into this. This looks fascinating once you start to look at the data here. We've been studying this stuff for a long time, but I was shocked to see some of the data I'm about to show you right here. So let's start with this. There's a Financial Post article that I think came out yesterday. It says a stronger than expected recovery has the Bank of Canada eyeing interest rate hikes in the second half of 2022. This always gets everybody's attention, especially in the housing market, because, and naturally it should. The cost of money dictates where the housing market is going to go. And when people threaten interest rate hikes, especially our Bank of Canada, it kind of raises some eyebrows. And we're just going to straight up call their bluff here. They've been calling for interest rate hikes since about the year 2011 and 12 here in Canada. It just doesn't happen. If you look at the historical chart that they have in this Financial Post article, you can see rates came from 4.5, which is already not high historically, right down to almost zero during the financial crisis. Then we had this 10-year window that was supposed to be this wonderful economic recovery. I mean, Canada, we have this oil price crisis thing kind of here, but there was this 10-year window where, things were supposed to be getting better as reported by the government. And look what happened. And rates came up a tiny little bit and then they just stayed flat. Then they went down a little bit here around 2015. And then, eventually they started trying to inch them up. Then COVID hits and they bring them right back down. So over this 10-year window, if we can't get rates higher, what makes the government think that they're going to be able to raise rates higher soon? I think it's just a lot of talk. And when you start looking at the actual math behind this, you quickly begin to realize that it really just is talk. Pierre Poilievre, I hope I'm saying his name properly, a politician in Ottawa, put out this tweet a little while ago. And basically it says on the right-hand side here, you see all the debt that we've accumulated in this country from 1867 till about the year 2015. It's 630 billion. So that's Canada's debt that we've accumulated from 1867 to 2015. Then look what we've added from about 2015 to 2022 or 2023 as projected. And I think he's calling out Trudeau here. I'm not making a political statement. All these politicians are about the same. All the prime ministers just add on debt. We have had different finance ministers that have been better than others, no doubt. But in general, politicians are just really good at adding on debt. But look at the pace. If we added 630 billion, over 100 and some odd years, look over the last 7 years, what we're adding. How are they possibly going to raise interest rates in any meaningful way? The interest payments on our debt would just be astronomical. So that's not really what the focus of this chat is. I just wanted to call that out a little bit. Let's dive into some of the numbers around the housing here in Ontario and what we think is headed our way. So I just want to show you this. There's a Toronto Star article that says, "We want you to stay. Canada opens doors to permanent residence for 90,000 international graduates and temporary workers." So this is how much Canada really wants to grow our population. It's no secret that we're a country that just takes in a lot of immigrants. Both of our parents are immigrants. I would not exist if it wasn't for this country. Our father is from Croatia. Our mother is from Scotland. They met here in Canada. So I'm very grateful to my own existence for immigration. But I just want to call out here, the amount here is quite staggering. Canada is rolling out a one-time special immigration program to grant permanent residence to 90,000 recent international graduates, as well as temporary foreign workers with work experience in essential occupations. International students will qualify for the new program if they have graduated from an eligible post-secondary program within the past 4 years. And if they are currently employed, they do not need to be in a specific occupation to meet the requirements. So if you've graduated and you're employed, welcome to Canada. The program is also open to temporary foreign workers with at least 1 year of experience in one of the 40 healthcare occupations, as well as 95 other essential jobs. And really just the way the reason that I'm sharing this is just to illustrate how aggressive Canada wants immigration here in this country. If we flip over to here, this next tab I have open here, and I've kept all the URLs visible so you can see where I'm going for all this different information. This is Canada.ca's website. You can see that our immigration targets for 2021, 2022, and 2023 are quite high. 2021, we're trying to get 401,000 new immigrants into this country. And that is really high historically. And 2022, we're trying to increase it. 2023, we're trying to increase it again. So Canada is really trying to grow its economy by putting more people into this space. That's essentially what we're trying to do. Canada has never historically been good at innovation or technology, but what Canada is great at is taking a lot of people from around the world and stuffing them into this country and hoping that that produces economic activity. And it sort of has been working. It's more a blunt force way to grow the economy, in my opinion. And again, I'm not really judging it. I'm just calling out what is here. And for context, I think it's really important when you look at 401,000 that we kind of just look at historical numbers so you get an idea of how big that number is. So if I go to a StatsCan website, you can get historical immigration numbers here, and you can see this 250,000 level has been the target we were hitting, from I guess the 90s. It does dip here, but let's call it, I guess the year 2000 or so. That was kind of like what we were hitting. 250,000. That was an increase over the previous 2 or 3 decades here. And so that was like a high immigration level. So when you hear 401,000 up here, you can see that we've just continued to increase this number. So just for some context, I hope that gives you a little context on that number. And then I just want to go over to this report here. So I'll come back to this page. Bear with me while I scroll up here. I just want to show you this in case anyone's interested in actually getting this report themselves. This is a CMHC report that came out in March 2021, Housing Market Assessment, Canada and Metropolitan Areas. And if we go back to that page I was on, give me 1 second here. Let me scroll here. If we go back to that page I was on here, look at this. This is excess inventories. It says evidence of excess inventories for Canada remained low as both the inventory of completed and unsold homes per 10,000 population and the purpose-built rental apartment vacancy rate remained below their respective critical thresholds. So this dotted line on this chart is I guess CMHC's critical threshold for how many housing units we need to support family formations in this country. And I'm going to get to Ontario in a second. But that's the dotted line. You can see we've basically been in crisis mode underneath the threshold for over 20 years. And recently, it looks like the amount of excess inventory is getting less and less and less here. So it seems like this trend, if I was to look at it, we have more and more people we're getting into this country, and we have less and less supply to offer. So this is where we get into part of the reason that housing prices in Canada and specifically Ontario, which gets about 43 or 44% of Canada's immigration, where prices just keep going up because we have more people chasing a scarce thing. And then if we look over here at some other data, let me bring up this page here. Here's Ontario, an Ontario.ca website, and they have this thing that, where they're outlining Ontario's housing supply action plan because they know it's a crisis. And they call it a housing crisis, and they have all this data around why it's a housing crisis, but not much seems to ever happen. So everybody's kind of aware that there's a housing crisis here, both for rental properties and new homes for people to purchase, but nothing really seems to happen. If we go over to this here, this report from linktobuild.ca, you can see when COVID hit, it kind of exacerbated? Can't even say that word. Made the problem worse. Let's go with that. It made the problem worse. I can't speak. It made the problem worse because over the course of 2020 and 2021, they're reporting that we're going to see a loss of about 9,000 housing starts just because of the construction delays that hit really last year. So now, we have a shortage already, but then you mix in this pandemic that slows things down, and then our housing starts even slows down further. And then I want to show you this. So let me flip over to this here. Actually, this is a great newsletter. Let's call him out to make sure he's getting credit. Excelen_GTA on Twitter is the Twitter handle. It's Alex. He puts together a lot of great information. He takes some of the CMHC data and puts it into chart form. Just really great. If you want to follow him on Twitter, that's his Twitter handle right there. And he put this one chart that I wanted to show you right here. Here it is, Toronto Metro Single Family Starts. So you can see at the starts, Here's the CMHC data. It looks like he's taken and charted it out here quite nicely. You can see new construction segment. The notable trend is a rebound here, and he is correct, there's a rebound here. But what's interesting is just the band that we operated in here since about 2008. You can see since 2017, it's just been coming down and down and down, and now there is a bit of a rebound. But when we're adding more and more people, you don't want to see this come down. So this is just kind of fascinating information and shows us that there are more people chasing a scarce thing, housing. It drives prices, especially when interest rates are low. So that's a great chart to look at. And now I really want to go to this Ryerson chart here. So this is a really interesting report. It is called GTA Housing Pulse: Demographics, Not Pandemic, Driving Real Estate Market Outcomes. And there's a chart here that really stuck out to us. The URL's there visible to you if you want to get this yourself. But take a look at this data on this page right here. Figure 4. The average annual growth in households by housing region. So for years, Nick and I have been looking at this data, and we've been using this number for the greater Golden Horseshoe. I think they're referring to it here. That's what the GGH is. There's the city of Toronto, the GTA, and the greater Golden Horseshoe. But if you look at this, in this area, we've always been using the number of about 50,000 household formations a year. And when you look at this forecast, this is where things get absolutely terrifying, because they're forecasting from 2021 to 2031. It's going to go from, so 2021 is basically now, from 50,000 a year to 70,000 a year. That is like a 30, what is that? Like a 30, 25, 70, what is that? Like a 35, 40% increase. So 35 to 40% increase in new family formations, which would mean that we would need an increase from our already crisis levels of new housing supply of 35 to 40% just to meet this level. We would need that much more housing supply to satisfy this demand. And if you look at some of the things they shared here, it's pretty interesting. I guess Hemson Consulting is the group that did this study. It said Hemson did forecast that millennials would live at home longer with mom and dad than past generations, but that pent-up demand would start to be unleashed between 2021 and 2031, contributing to large increase in the number of new households across the GTA. In addition, those already on their own would move from renting apartments to wanting ground-related housing as they start to build families. This is exactly what we're seeing when we're dealing with millennials. We are seeing this in real time here at Rockstar. They expect that 70,000 new households would be created per year between 2021 and 2031 in the GGH, up strongly from 46,000 between 2011 and 2016 and 54,000 in the current 5-year period. The Hemson forecast also called for a shift in household demand into areas outside of the city of Toronto, super interesting, and into other regions of the greater Golden Horseshoe. The share of new households opting for the city of Toronto would fall to 20% between 2021 and 2031 from 30% in the prior decade. While the underlying demographic demand was evenly split between apartments and ground-related housing in the last decade, Hemson expects demand for ground-related housing to be almost double for apartments. There is so much value in those few paragraphs here about millennials and demographics, because we've always been so focused on immigration alone. And then the type of housing, where in Toronto, an absolute fascinating report here. And if this really takes place over the next decade, we are going to see an increase in property prices, not a decrease. And remember, our history, if you're not familiar to us, is our family went through the most brutal real estate correction that Canada has ever seen in 1990. Our father was flipping properties. We lived that when property prices came tumbling down. So we're not trying to show data here that just kind of says, oh yeah, property prices go up forever. No, we're trying to show data that can make us try to predict where prices may go. It's kind of like, we're long-term optimistic and always short-term paranoid. That's our approach to housing, and it has been for a long time. We're very long-term optimistic of this area specifically because of what the data that you're seeing, but we're also short-term paranoid at all times, trying to protect ourselves and trying to buy cash flow properties because we know anything can happen at any time. So when you see this, to us, it means the housing crisis is going to get worse, not better, because we see no signs of supply matching this increase, and we'll be looking for it. If anybody here listening has housing supply data that they'd like to share with us, please tweet it at us, email it into Rockstar, whatever way you can get it to us. We would totally appreciate it. So when we go back to the beginning here and we look at these, talks of the Financial Post article here talking about the Bank of Canada may raise rates, but then if you look at some basic data here and you look at the debt in this country, you realize, how are they ever going to raise rates with this much debt? So it doesn't look like interest rates are going to go up. It doesn't look, if I flip back to the supply here with family formations on the increase, it doesn't look like we're going to have a lack of demand. Supply, we don't get the sense that it's matching this increase in demand. So the biggest threats then to the real estate market going forward, in our opinion, are with this much debt in the country, Canada is going to come after taxes. They're going to do something with taxes. It's something we're going to have to be very aware of, all of us. And we'll be talking about that at some of the future Rockstar events that we do. Another thing would be incomes to qualify. Can people still continue to qualify for housing as prices go up? That's something for us to be aware of. And probably the biggest thing to be aware of, let me just change my screen here. I'm in the corner here. The biggest thing to be aware of is any sort of credit crisis. Our good friend Greg Foss always talks about possible contagion, credit markets to be aware of it. That is a valid threat. If the credit markets seize up and nobody can get access to credit, the real estate market is built on credit. So that's something we need to pay special attention to. But overall, if we were just to look at some of the fundamentals here, more people are going to be funneling into Canada. We get about 44% of all immigration. And then the millennials look like they're going to start buying. Family formations that look like they're increasing further. And so that looks like property prices at least are going to stay stable and perhaps even increase. So the housing crisis that we are in Ontario, there does not seem to be a light at the end of the tunnel. This is going to be a fascinating decade. We'll continue to share this information. Hopefully you find this stuff as fascinating as we do. That's it for this one. Until next time, your life, your terms.